Investing in apartments can be a great way to grow your wealth. But like any investment, it's important to understand the factors that can affect your returns. These factors are called economic drivers. Economic drivers are like the engine of a car. They determine how fast and smoothly your investment will go. By understanding economic drivers, you can make smarter decisions about where to invest, what to buy, and how much to pay. Think of it like this: you wouldn't buy a shop in a ghost town, would you? You'd want to choose a bustling town with lots of potential customers. The same goes for apartment investing. You want to find areas with strong economic fundamentals that will support high occupancy rates and rental income. This is where understanding economic drivers comes in. By looking at things like job growth, income levels, and industry trends, you can get a good sense of the economic health of an area. This information can help you identify promising investment opportunities and avoid potential pitfalls. Remember, knowledge is power. By taking the time to understand economic drivers, you'll be well on your way to making informed investment decisions that can help you achieve your financial goals. So, what are these key economic indicators that every savvy apartment investor should watch? Let's start with employment growth. A growing job market is like a magnet for renters. When more jobs are available, people move to the area, increasing the demand for housing, including apartments. Next, we have income levels. Simply put, higher average incomes in an area usually translate to higher rent payments. Tenants with more disposable income can afford higher rents, which is good news for landlords. On the other hand, areas with stagnant or declining incomes might limit your ability to increase rents. Finally, keep a close eye on GDP growth, both locally and nationally. GDP, or gross domestic product, measures the total value of goods and services produced in an economy. A growing GDP signals a healthy economy, which is generally positive for real estate investments. A shrinking GDP, however, can indicate economic trouble ahead. By monitoring these key economic indicators, you can get a sense of the direction the rental market is heading in. Is it a landlord's market with high demand and rising rents, or is it a tenant's market with more competition and pressure to keep rents stable? By understanding these trends, you can make more informed investment decisions. While numbers are important, don't forget to look beyond the raw economic data. Dig deeper into the types of industries driving the local economy. Is it a diverse mix of sectors, or is the area heavily reliant on a single industry? Diversity is key to mitigating risk. A town heavily dependent on a single factory, for instance, could be vulnerable to economic downturns if that factory shuts down. On the other hand, a city with a thriving tech sector, a strong healthcare industry, and a growing tourism scene is much more resilient to economic shocks. Consider potential economic vulnerabilities specific to the area. Is it prone to natural disasters like hurricanes or earthquakes? Does it face challenges like water scarcity or political instability? These factors can significantly impact the long-term viability of your investment. Remember, a well-rounded investor doesn't just look at the numbers, they understand the story behind those numbers. By considering the bigger picture, you can make smarter, more strategic investment decisions. Now that you understand the importance of economic drivers, you might be wondering, how do I actually research and evaluate this information? Thankfully, there are plenty of resources available to help you. Start with reliable government websites like the Office for National Statistics, ONS, for national data, and your local council's website for regional data. These websites provide a wealth of information on employment, income, GDP, and other economic indicators. Don't underestimate the power of local knowledge. Talk to local real estate agents, property managers, and even other investors. They often have valuable insights into the local market that you won't find in any report. Finally, remember that economic conditions are constantly evolving. Stay informed by reading industry publications, attending real estate events, and following economic news. The more you know, the better equipped you'll be to make smart, profitable investment decisions.